So smaller. All right, we're gonna use NZD USD as an example, which we already have marked up, and we get the line example as well. How do I know when things are headed up or down, right? I've collected a lot of data on this specific entry model. How long have I been trading this way? I would say 6 out of the 7 years. In the first year, I did support and resistance, revenue test, basic stuff. And I'll kind of filter you guys's all your breaking retest and support and resistance traders. There's nothing wrong with that. This just happens to be my style because I've noticed physically in the behavior price, this is consistent, right? And with people with breaking retest and support and resistance, you can filter your support and resistance based off of them showing you, you know, continuously showing you, right? And whether you'll be good on your limit orders or your market executions or not, right? So this video is going to get a little bit more specific when it comes to price action and how to tell when it's actually like going down, up, or up from the last displacement, right? So as you know, and as I'll show you, you know, from a higher time frame point of interest, usually there's displacement that happens on a lower time frame. And sometimes the higher time frame too. After displacement, right? You have a high that was swept, or my bad, a high that was established, a low that was established. But if you notice something, they come down, they, you know, sweep some more sell side right here, come back down, establish sell side liquidity again, then establish buy side, and then they go away from it majorly, actually. It's not just like a couple of candles and then it goes up. It's
We are
going
now 1 minute away from that BOC rate decision. Once again, they are
it goes away from it major. We do have that Baker counter rate decision in 1 minute, and I do expect that to be neutral. Um, but they'll go away from it in this area after establishing the high. It's not a continuous just establishing a high and a low, and then they just continue to take more highs. That is called a high resistance liquidity with longer, and that does happen, right? Actually going down, you'll have it wake up, establish the high, establish the low, go away from the high immediately, and then come back and take it later in order to take the low as well after that further displacement. And then the which will be very precise into whatever POI, right? So from the last sell side liquidity squeeze, we had that happen. Now, right, after displacement happens, confirmed short, we are in this bearish trading range right here from where the wick started to wherever the low kind of bottomed out right here. After that, naturally, we're going to have a retracement back into your POI, right? Usually in discount territory. So if we draw this from here to here, you can tell that this is obviously discount territory, my back premium territory right here. What we sell. So we just actually put that as like an example, right? Approximation premium to discount and things like that. You guys already know that as well. So if I came back into the POI over some days, right? So if I saw all of this happen over here on this side, I'd be like, yeah, we're gonna go long from one of these points, one of these lows, continuously until we get back to this POI. Happens every time it's like that. All right. So once we did get back to the POI, right? So you can see in the red that this is premium. Once we did get back to the POI finally, we established a high once again, and we established a low once again. Price. Go play. And then you tell me that someone's closed the door. Yeah, the high swept, a high swept, and then right here after they established it. So they came back into discount as after this placement, right? Never violating this high, this is a strong high, right? After this placement, these are all basic things about price action that I've showed you. Established a high, they went away from it. Then they swept it into the 4 hour order block, right? That was left before we moved this placement down. After that, they came down and swept the low right here. I didn't mark it up because I wanted to count to the current ones that price is going for. After that, after that sweep of the low, that was displacement, and I did show that this high was likely not going to be swept. Price came back up, and after they swept to the low here, right? During that process, they established a high here and another low here by sell-side liquidity. They came back up in this case, was the high very precisely, but right. If you notice from here to here, they didn't touch this candle right here. They only continued lower, right? as they continue lower, you can see after the sweep that they obviously are coming for the sell side liquidity down here. Price came down, it printed a 4-hour imbalance right here. And then if you look here, price hit the inbound, picking up some orders. After that did happen, and let me just draw that a little bit more precisely. After that did happen, price did end up falling some more down to where we're at now. And then we have that low swept for the displacement. This was the same case. We established a high, we established a low at that point, and price went away from the high dramatically, and then came up and swept it with this wick right here. Then after that, they came for the low. That's right, that is displacement. So naturally, right, if you look at this last displacement, what do you think is going to happen? If this happens on a bigger scale like this, and it comes back really deep, and this happens also usually several times if you're swing trading over weeks and months, on the way down. High established, low established, sweep, sweep. That's displacement. Then price returns back to a point of interest right before the displacement happens for enough entry in order to keep going. So, with the overall goal being obviously this extreme low right here, the overall long-term goal. And typically in a regular market environment, when we didn't have all this going on, I would be swinging this down to here exactly for about 7.4% and holding that for 2.5 to 3 weeks, maybe, depending on how long it takes and volatility and all that. That's all out of my control. I can only enter the trade when I see it. So that being said, right, every time a high is swept right here, or just at all buy side liquidity, the high is not going to be broken here. That's a strong high. I showed you that in the video. And you will have a high resistance liquidity void starting all the way down, as I showed you back in the past. If and when you have a high swept much like this, right? And how do you qualify this high? If established, it's obvious it's a big high, and there's a low right here. Extreme high, extreme low, right? Within the bearish range. Has to be established and then taken. That's why GBP USD, we are waiting on instead of this entering. Let's go. Try to keep this video decently short. That's why this is happening right here. We had a high swept, and then we had a high and a low established, right? After that. Didn't come from this high, strong high. I would not be telling this right now. Even though a high volume, I would expect price to come back up and take out some higher times in the future. Weekly rate of one. Pretty much same thing with Euro USD. We had buy side swept right here, which we did an order block, right, from the previous range. And now we have a higher resistance liquidity going all the way down. Price did come back up and swept a high here. All right, sometimes you do have to go down to the hourly, but this was a nice extreme high right here, extreme low. Extreme high was established. And then swept, and then price came down. We do have sometimes more small sweeps like this where price will not go dramatically away from it like that, or just establish it and then have a hard time actually taking it via all these candles and then finally do so, right? This is not confirmed until we tweak this low right here, the displacement. After that, price established another high. We came back into this in our order block right here, right? And I did draw in our order block right here just to show you that they are there. We came into it, we hit it beautifully, came back down, and kept coming. Price established a high, price established a low within the range. I'm not taking this trade unless we come back to premium. Same with the other one too. So that's an example of buy and sell side liquidity. I was left within the range. Using some liquidity void that have not been taken. So your expectancy should be for it to return back up into this area, given that you're looking for another displacement, basically. Buyers right here, displacement, price is going to come back up and establish buy side and sell side, go away from it dramatically, and then come back up and return and hit the POI that was left, right? And this is prior as well. You can see this wick right here, we hit this one on the block as well. And that's how you know that it's going down. So let's go to the USD again, because the example that's actually in this situation. I just wanted to explain that to you for context, right? So we had that happen, right? Prior to that, we had that being hit. Remember, this is from a previous displacement, and then price started to break down and How do you know when that's going to happen, right? Break and retest. Step one, you had a 4-hour imbalance right here on the way down, right? That came back up and was respected. That means nothing if price does this to the imbalance. It starts to trade well above it, right? The imbalance is invalid at that point. But the imbalances that are true are they have pretty much sniper entries that go into them and then they continue down. Imbalances that are not true will have this happen and you'll be stopped out. That's just maybe correct direction and bad technical analysis, or maybe you missed something. I do that too sometimes. So that's cool. And then do that, lock that in place. So we expected that. Prior to that, we had one set of context plus fundamentals, and now this now qualifies as the POI left. We might come up to this order block at best, but the POI left before the displacement down, the one that actually is printed. So every time you on the way down or on the way up, POIs are printed, POIs are printed, displacement happens. Every time you have from a previous displacement, boom and boom, price come back up into premium or discount, whichever the situation leads to, long or short. Establishes a high, sweeps a high. You can be willing to bet with like a 90% chance, 100% chance pretty much, that high is not going to get swept. Only if you mark up the right high, right? So this is how you qualify the high. Established, and then once it's established, price does not continue to take it. Price establishes it and then goes away from it, almost as if they're getting ready to sell, but then they just don't because they're only coming down to establish the low. After the low is established, they'll retrace and now for that high. You can set your limit right here, or fine tune it on 1 hour instead of right here, and gotten into that. If you miss that limit order, dang, missed by a pip, more price prints, displacements confirmed down here. Boom, last POI before the displacement was this 4-hour imbalance as I thought it would be. I expect price to come back up with this and go down, with the overall goal being obviously the low that I referred to. So if you're doing break and retest, right, I would wait, right? And I'm gonna draw this in like with another vendor real quick. If you're using break and retest, I would put my levels by where displacement happens, right? After the displacement happens. So if you're selling, I'd be like, okay, this high was swept. And this is how you can blend in the what I'm teaching you with what's going on and apply it to break and retest. So we had displacement right there, right? And you had a level right here, right? And you can use that style, or you can use mark the liquidity that actually was swept as well if you wanted to. Where's that one? And say, okay, I have a level right here. Make that not a magnet. Or you can say I have a level right here in this area and watch price trade below that level. And then you might say, I want to do a break and retest in this area since we're clearly selling without the price action. The swing trader, higher swept right there, buy side liquidity. And then your next level after the displacement actually, and then mark that up, would be where the displacement happens. Takes some getting used to, but it's pretty effective for just setting limit orders. Sell side liquidity. So yeah, you like, okay, the high was swept within the range, right? I'm just using liquidity and break and retest. You had displacement confirmed. Most people use their break and retest like so, and they'll put it around like the last candle right before the drop or something like that. And they'll say, I'm going to break and retest right here in this area. Typically, that is the norm. So let's just say you're going short. Most people will put their stuff right here, right? Maybe they'll stop just behind the last high, which is right here. It's pretty common with that style of trading. And then you're going for like, let's just say 2% gain. That's what I like to go for. It's consistent. It gets hit a lot, especially in today's market. You're going to have drawdown, first of all, automatically, as we're coming back up to its imbalance right here, like I think, and or this order block right here. So this area right here overall, then it's gonna trigger, but you're gonna have drawdown, boom, and then price is gonna start to go down into your favor. There's nothing wrong with that. There's nothing wrong with that method. There's nothing wrong with entering like that, but you have to move your stop loss, expect drawdown in that situation, and move your stop loss behind the POI that was left right before the sweep. that caused the displacement, which in this case would be this imbalance slash order block combo. What I would do personally is if we have displacement like this, is find a candle from a previous sweep, like this one right here, line it up there. It's way better aligned with where the POI will actually hit. And then maybe you're right here, same thing. Stop loss just behind the high, or maybe 2 to 3% if that's your thing. It's going for that, and then now you're more aligned with that. Instead of putting it down here, like I had showed you, you put it over here at a candle from the latest sweep, and that could be your current level. And this is only valid after the displacement happened already. You can expect price to retrace and not take out this high, given how high resistance liquidity was. You can see that when it's up right here. Even when they came for another high, they did not dare sweep this high or touch this high. And this is where that 4-hour order block hit as well from me. So you can do a break and retest level just like that, right? From the previous sweep. And that's pretty much it. I wanted to show you guys how you can use liquidity and break and retest and key levels and you can draw your liquidity here. You can see that's what the high here and that's what the low here for another previous displacement. Price came down, established a low. My bad, established a high, established a low, and then price tried to come for the low, but did not. Swept the high right here in this area, and then came down and ultimately did displacement down here. So, boom, the level is based on that actually. After the displacement happened here, you put in your level right here, because this was whatever this was right here, which if I go down to the 1 hour, I guarantee you as a POI right there. It was the last POI with this wick hit right here before the move down that caused the displacement. So you can see how that could be really effective because same here with this limit order on displacement, buy shot swept right here from this candle to this candle, and you could have set your limit order right here for another entry. So let's just go short right here in this area ish, and I would fine tune that and maybe have a stop loss just behind the high going for a 2% gain, right? So that's a more effective way of having your break and retest for when you are using this method, because otherwise you risk getting stopped out at these certain levels that end up being where they're going to stop it and things like that. You can already see on NZD USD, that's not how you spell that. You can already see on NZD USD that the retracement is already getting ready to start. You can see we might have a few more bearish candles at best, but it won't be huge. And you can see the after the sweep, they start to recede that bearish candle right there, and just have to overall show weakness, right? So I expect the retracement to occur, and between now and Friday, we should be able to get this target smash for sure. So I just want to teach that and show that you can use filtering the liquidity the same way as I do, but to use your support and resistance and break and retest, and then make your break and retest more accurate at the end of the day. You apply what I just showed you. See you in the next video.